हम्म, हम्म, ये हम करेंगे। जस्ट चेक लाइव, लाइव चेक करो। लाइव लाइव लाइव। अच्छा, नाम क्या दिया है? लाइव वन। वीडियो इज अनअवेलेबल। लिंक डाला। कौन सा है? डे वन इंग्लिश लाइव। इसमें ब्रेक आ रहा है? कौन सा है? विच वन? कौन सा नाम दिया है? नाम क्या दिया है? का नाम क्या है? कौन सा क्या नाम है? अरे तुम सेम ईमेल आईडी है?
आपका हेलो है मेरा प्लेन।
चल हेलो very good morning everyone. How are you all? Everyone fine? Super. Just let me know is everything is clear or not, video audio is everything fine or not, so that I can proceed my class today. Everyone fast. Yes, okay. Now, first of all, I welcome you all in my CA Final Financial Reporting Saaransh Power batch. Let me first give you the entire details of the batch, so that if you have any doubt, the doubt will be resolved. Okay. Now, of course, the name is Saaransh Power batch, but it does not mean that we will not cover all the concept. In this particular batch, 100% concept will be covered as per ICAI syllabus, as per ICAI study material. Okay. Yes, this batch will be little focus on exam point of view. Means, if you will say in regular batch, we actually cover the entire batch in 250 to 260 hours. In this particular batch, our target is to complete the entire syllabus in 150 to 160 hours. But right now we are targeting that will take 150 or 160 hours. But then also we'll cover entire concept. will cover all the concept, whatever is important from examination point of view, whatever is covered in ICA study matter here. Okay, full coverage will be there. Doubt solving will be there during the class, after the class. Don't worry about that. Now, coming to applicability of this batch is applicable for all the upcoming attempts till there is some amendment. We all know that in financial reporting there will be very little amendment. If suppose there is an amendment, don't worry about that. We'll provide that amendment through what? YouTube video or whatever. For the amendment, don't worry. Right now, whatever may be your attempt, correct, then also this batch will be applicable for that particular attempt. Coming to the medium of this particular batch, this batch will be fully in English language. No other language will be taken into consideration. Entire batch will be in English language. Okay, sir. Now, what are the books you are going to use for this particular batch? So, I will provide you two set of financial reporting book. The first one is known as Ind AS Saaransh book, in which all the concept will be covered. Now, I will introduce that Ind AS Saaransh book soon. That Ind AS Saaransh book has been designed in such a way that all the concept have been incorporated in that particular book, so that you can revise the entire concept just before exam. And what I have done, all the reference question of that particular concept has been also highlighted in that particular book, so that suppose you have done one concept, you know what are the reference question of that particular concept are in our question bank. Concept done, you can revise all the question for that particular concept. In that way, that particular Ind AS Saaransh book will be useful. Then of course, we'll provide you question bank. There are 4 volumes of question bank. Don't worry about 4 volumes, because each volume has been designed in such a way that it is handy to use. Means I have not given in one volume 600 pages. Instead of that, I have divided the entire question bank in 4 parts. I could have done in 2 parts, but then that question bank will be too bulky. What I have taken into consideration that all the questions of ICA study material, RTP, MTP and past year examination question has been incorporated. If there are some repeated question that has not been incorporated, means any question which was there in RTP, then that same question was asked in exam, then again I have not repeated that particular questions. So all the different types of questions which are in ICA study material, RTP, MTP, past year examination question, all are covered. With that, there are some other questions I have taken into consideration which are from ICA resource, which may be useful to understand the concept, that also I have incorporated. And I have seen that, means you will also observe that some of the questions which I have taken from other sources have been also asked in examination. Now of course that is a part of what? RTP, MTP or past year examination question. Got this point? About multiple choice question, what I believe that multiple choice question can be only practiced after the completion of entire syllabus. Because in exam they will ask multiple choice question, not chapter wise. They will ask multiple choice question in a case scenario basis. So in one case scenario, they may have a multiple question of different chapters. So that you can practice only after the completion of the entire syllabus. For that reason, I have given you the soft copy of multiple choice question, which will cover all the MCQs, all the case scenario which have been asked in RTP, MTP as well as past year examination question, and all the case scenario whatever has been given by ICI, that all are covered. So what about chapter wise MCQs? So what I have done, I have also considered chapter wise MCQs, so that if you have completed one chapter, you can revise the MCQ of that particular chapter if you want to just understand whether you are whether you are conceptually strong about that particular chapter or not. For that reason, I have given you chapter wise MCQs also. Got this point? But MCQs will be provided in by way of soft copy. So from where you can download the soft copy MCQs. The soft copies MCQs can be downloaded from our app. It will be uploaded soon. If not uploaded, you can download from there. Okay. However, if suppose there is some technical issue in your app, you can download from our WhatsApp channel also. The link of the WhatsApp channel has been already provided to you. If not provided, you can just contact our team member. Okay, sir. So hard book is over. What you will get? You will get 2 volumes of Ind AS Saaransh book, 4 volumes of question bank, and soft copies of MCQs. Already the coverage I have already said, this book will cover everything as per ICI resource. One more point, there are many illustrations which have been provided in ICI study material. That illustration is only to understand the concept. And normally what I have seen that they don't ask that type of question in exam. So what I have done, that illustration I will give you as a part of soft copy. So if you have sufficient time, then you can also revise, also go through that particular additional illustration. So additional illustration will be provided by way of soft copy. That also you can download from our app. Understood? Yes, sir. Chalo. Now coming to doubts, nothing to worry. During the class, of course, you can ask all the doubts through our app only. You can see that in the video there is one chat box. You can ask any doubt during the class. The main doubt will come after the class. So that doubt you can ask through WhatsApp group. The dedicated WhatsApp group will be provided soon to you. I hope you have already received the link of WhatsApp group through email. If not received, you can just contact our team member. Correct? Sir, what about, sir, can you call me? Yes, you can call me. What you can do, just leave a message in that WhatsApp group. Sir, we want to have a discussion of that particular doubt in a call. So I'll give you the time. In that particular time, you can call me. Okay, sir. Now coming to test. What I have done, I have divided the entire syllabus into 5 parts. Part 1, Part 2, Part 3, Part 4, Part 5. And I will teach you on that basis only. First, I will cover Part 1, then Part 2, then Part 3, then Part 4, and then Part 5. Okay. So what you are supposed to do, that Part 1 test, you need to write down as soon as Part 1 syllabus has been covered. So that what happened, once Part 1 has been covered, can I say, you just give yourself some time, download a test paper, you can write down the test. The test will be also uploaded soon in our app, CJ virtual app. Got this point? Once you have written a test, the solution you can download from our app and you can self-verify that. But if you want us to evaluate the test paper, so what I have done, I have just appointed one dedicated person who will verify, who will evaluate, and who will just inform you what mistake you have done. Correct? For that purpose, you need to just pay a nominal fees of 500, because you know that I don't have time to check the entire paper. That is not practically possible. So for that reason, I have appointed one dedicated person who is a chartered accountant, and that person will verify, will evaluate, and will just give you one-to-one call to improve where you are doing mistake. For that, there is a nominal fee of rupees 500. Got this point? So test part you have understood. Any doubt in test? So 5 chapter wise I will conduct, and that test has been designed as per ICI requirement. Means even though it is chapter wise means part 1, whatever chapters I have considered, all the chapters will be taken into consideration, but then also that will be of 100 marks, 30 marks MCQs and 70 marks descriptive. So it has been designed as per ICI requirement only. Okay, this will help you in writing practice. Writing practice is very, very important. Most of the students do not score in FR because they don't do writing practice. Writing practice, solving the questions by writing is very, very important for this particular subject. Okay. Now, what is the objective of this particular batch? Objective is very simple. I always say these 3 points are very important to clear any exam of ICI. First is dedication, then second is discipline and consistency. I always believe that if you are dedicated, if you are consistent, if you are disciplined, you can crack any exam of ICI. And the objective of this batch is that you must complete the entire batch as I complete, whether you have taken live classes or recorded classes. Recorded classes, if you have taken our recorded classes, so right now I am taking my live classes. After live classes, the video will be recorded and that will be uploaded in our app. So what do you need to do? You just need to listen that recorded classes as per your time convenience. But normally in recorded classes, what actually happens, students postpone the classes. Why? Because now the entire class is under their control. They can listen at any point of time and they can postpone. So my request is that today's class, you need to listen today only. As per your time convenience, it should not be postponed to other day. That should be the objective. So if it is a class of 150 hours, you should complete in 150 hours, but not in 5 months. You should complete in almost what I will say 60 or 70 days, you should complete it. That should be the objective. Okay? Yes, sir. So dedication, discipline, consistency is required for passing any exam of ICI, I will say. If you have these three characteristics, you can crack the exam very easily. Okay? Now what should be the target? I always say target should be in FR, you can easily score more than 75. I am saying you can easily score more than 75. And with thora's effort, you can score what? More than 80, more than 90 also. So target should be, I will fix one target, that your target should be what? What do you think? 70, 75, 80, 90, what you should do? Of course, the target should be always at highest level. When you think about highest target, then only you can achieve that. So your target should be what? From 90 to 100 marks in FR. I am saying easily, if you have practiced all the questions, whatever has been given in question bank, easily you can score 70 plus, 75 plus. With little effort, thoda sa more practice, you can score 90 plus also. The target should be 90 to 100 marks. That should be the target of any particular subject. I will say not only in FR, it should be in any subject. When I used to prepare for CA final exam, then my target in all the subject was what, 90 plus. However, it does not mean that actual marks will be 90 plus, but when you are targeting that, your preparation will be up to that level. Understood? Everything is a game of mindset. What you are thinking, normally in that way you behave. If you think that you want to score only 60 plus, then your preparation will be of 60 plus only. When you think that you want to score 80 plus, your preparation will be of that level. And when you think that you want to only pass the examination, your preparation will be up to that level. So don't think that you want to pass in this particular subject, you want to pass in this particular exam. Think that I want to get a very good marks, highest marks, super marks in this particular subject, in this particular exam. Then your preparation will be of that level. Correct? Yes, sir. Now just write down this number. This number is very important. Any doubt related to what technical issue or whatever, just contact my team number. They will help you in this regard. Okay? Yes, sir. Now let us come to our syllabus. So coming to syllabus, you can see, of course, in our syllabus, actually, if you see, the syllabus is what? Only Indian accounting standard. So what is Indian accounting standard? I will inform you. But then also, if you think from examination point of view, if I will say, just write down today I just give you the pattern of question paper so that you will be able to understand what type of question paper will come in exam. So if I will say pattern of question paper, so it has been divided in two parts. Everyone know? One is part 1, second is part 2. Part 1 is what? Multiple choice question. How many marks? 30 marks. 30 marks. Means there will be how many multiple choice question? 15. Each of how many marks? 2 marks. And it is compulsory. Means there is no option in this. Okay. Trust me, it seems very easy, but normally what I have seen, the students are not able to score good marks in MCQs because of lack of conceptual understanding. They know how to solve it, but coming to multiple choice question with the options, they might be confused, and one mistake you lose 2 marks. But your target, if you can score more than 20 in this, more than 20, then can I say 70 plus is easily achievable. Correct? I'm not saying you need to score only 20 or 22. It should be 30 out of 30 only. But for this, conceptual understanding is required. Even though same type of question you have done in the past, but in exam what happened, if you are not able to apply the particular concept immediately, either you will take more time or you will choose wrong option. So MCQs, correct, is super from examination point of view, and you can easily score if you are conceptually strong more than 20. Okay, yes sir. Coming to part 2, it is descriptive part. What do you mean by descriptive? Means you can say long questions. Yes sir. Descriptive. How many marks? 70 marks. 70 marks. Out of this 70 marks, question number 1 will be compulsory. Question number 1 will be compulsory, and question number 1 will consist of 14 marks. Then question number 2, question number 3, question number 4, question number 5, and question number 6. Out of these 5 questions, you can attempt any 4. You can attempt any 4 questions, and each question once again consists of 14 marks. Each question consists of how many marks? 14 marks. But in this particular part, question number 2 might have 3 part, question number 3 might have 2 part, like this. Means each question will have some part. Means there will not be one question in that, there will be sub question of that particular question. Question number 2 might have question number 2A, 2B, question number 3, 3A, 3B, 3C, like this. Okay. Question number 1 will have only one part, that is of 14 marks, and normally it is of from consolidation of business combination chapter. Okay. Yes sir. Now if you just see the syllabus. Now from exam point of view, syllabus I will divide in 2 parts. Correct? If you see, this is 50%, this is 50%. Coming to marks also and coming to time also. Means this part will consume your 50% of energy, and this will contain few chapters. First chapter is what? Consolidated financial statement. Consolidated financial statement. Second is what? Business combination. Third is financial instrument. Fourth is, are you writing with me? Whatever I will write down. Correct? That will also of course help you in your preparation. Okay. Financial instrument. Okay. Then fourth is share based payment. Fifth is revenue recognition, that is revenue from contract with customer. It is nothing but Ind AS 115, you write down. Basically we call it Ind AS 115. This is of course Ind AS 102. All are Ind AS only. Correct now. This is Ind AS 32, 109. There are two Ind AS. This is Ind AS 103 and this we have Ind AS 110, Ind AS 111, Ind AS 28, Ind AS 27. If you want to write down Ind AS number, you can write down. Okay. So how many chapters I have already written? You can see 5 and one more you can write down 6, that is lease. Lease, that is Ind AS 116. Ind AS 116. So this 6th chapter will consume our 50% of time. Correct? It will take more time to cover the chapters and this will also be 50% as per marks are concerned, means out of 100 marks, 50% marks will be from this particular chapter. And all other chapters, all other Ind AS and chapters, whatever chapters we have, there are some theoretical chapters, that will be the second part. Understood? So you can see these 6 chapters will consist of 50% of marks and all other Ind AS, there are many other Ind AS. There are actually, if you see the chapter, there are 34 chapters. So out of 34, if you see 34 minus 6, so 28 chapters are in this category. 28 chapters are in this category. And normally student, why they are not able to score in exam? Because they do not focus in other chapters. They do not focus in other chapter. But can I say other chapter will also consist of 50 marks and that also have the same number of hours. Means if suppose if I am taking 75 hours to complete these particular chapters, try to understand whatever I am saying. If I am taking 75 hours to complete these chapters, so I'll be taking 75 hours to complete other chapters. So both are same. This entire chapters, 6 chapters will take 75 hours. How many marks? 50% marks from examination point of view. The other chapters will also consume 75 hours and that will also have how many marks? 50% hours. 50% of marks. So it means if you do not focus on this chapter, you lose marks in exam. And what I have seen, what I have observed, the student normally give much time in this, focus on the first part, focus on this 6th chapter, ignoring some of the chapters of other Ind AS, and because of that reason, if some questions are coming from that particular chapter, they are not able to write it correctly and they are losing marks. Okay sir, but our focus will be both, whether it is in the first part or second part. We need to cover everything from examination point of view. Okay, got this point? Yes sir. Now let us start our class now. Without wasting your time, let us start our class. Are you all ready or not? First, are you all ready? So if you are ready, we can start our financial reporting class with chapter number 2. Bolo. You can see our syllabus mainly consists of Ind accounting standard. So what is Ind accounting standard? First, let me explain you. What is the applicability of AS in India? What is the applicability of AS in India? So can you say all the entities are divided into 2 parts? One is non-corporate, entities, and one is corporate entities. Corporate entity means what? Companies. As per Companies Act, all companies and other than companies will be non-corporate, for example, partnership firm, proprietorship or whatever. So the first question arises whether AS is applicable to non-corporate entity. What do you think? whether accounting standard is applicable to non-corporate entity? Of course, yes. If their financial statement are attested by any chartered accountant, means if any chartered accountant is attesting the financial statement of non-corporate entities, so as per ICI, that financial statement should be as per the accounting standard issued by ICI. Means can you say for non-corporate entities, what is applicable? AS issued by ICI, Institute of Chartered Accountant of India, but this is applicable only when their financial statement are attested by a chartered accountant. Means the financial statement of partnership, firm or proprietorship are not attested by any chartered accountant, then there is no need to apply accounting standard. Okay, yes sir. So this is as per one of the circular issued by ICI to the members of chartered accountant. If you are attesting any financial statement of any non-corporate entities, that financial statement should be as per the accounting standard issued by ICI. Okay, yes sir. Now AS issued by ICI are what? AS1 to AS32. How many AS has been issued by ICI? This is only for your understanding. AS1 to AS32. Out of these, AS6 and AS8 has been deleted, has been removed, and AS30, 31 and 32 is not applicable to non-corporate entities. Even though issued by ICI, but that is not applicable to non-corporate entities. Got this point? So all the balance accounting standards are applicable as per the applicability criteria. For that, there are some relaxation and some exemptions given to what is small non-corporate entities, but that is not a part of our syllabus, that I am not discussing. Got this point? Have you understood this much? Yes sir. Now coming to corporate entities. So there are two types of companies for the applicability of accounting standard. How many types of companies? Two types of companies. One is companies correct, to which Ind AS is not applicable. Ind AS not applicable. Companies to which Ind AS not applicable. And second, companies to which Ind AS is applicable. Now you must have find that sometime I am using AS, sometime I am using Ind AS. AS means accounting standard. Ind AS means Indian accounting standard, but both are as per Indian context only. Even though I am saying AS, that is also for Indian entities only. When I am saying Indian accounting standard, that is also for Indian entities only. Got this point? But you can see there are two sets. One is AS, one is Ind AS. So companies are of two types as per the applicabilities of accounting standard. Companies to which Ind AS is applicable, company to which Ind AS is not applicable. It means any company to which Ind AS is not applicable, for them accounting standard will be applied. But which accounting standard? That we need to understand. So write down. For them, what is applicable? Accounting standard notified under Companies Accounting Standard Rules 2006. Companies Accounting Standard Rules 2006. Means can I say this AS issued by ICI and AS notified under Companies Accounting Standard Rules 2006 are actually different. Correct. Because when I am saying AS issued by ICI and any accounting standard which are notified under Companies Accounting Standard Rules 2006, there are two different parts. But whatever AS issued by ICI, that is only notified under these rules. Means practically speaking, both are same. But you can't say to non-corporate entities AS which has been notified under Companies Accounting Standard Rules that are applicable. You can't say that. So whenever I am asking about non-corporate entities, non-corporate, you need to say for them AS issued by ICI is applicable. AS issued by ICI is applicable. But whenever I am asking about those companies to which Ind AS is not applicable, you need to say AS are applicable. But which AS? AS which are notified under Companies Accounting Standard 2006 are applicable. Okay. In this, which AS are notified? So in this AS 1 to AS 7 are notified. AS 8 was not notified because before 2006 it was deleted. So AS 1 to AS 7 and then AS 9 to AS 29. You can see AS 30, AS 31, AS 32, even though issued by ICI, was not notified under this rule, and hence it is not applicable to this type of companies. Okay, sir, got this point? This all were your part of CA Inter syllabus. Means in CA Inter you have done this. In CA Inter you have read what? Accounting standard. All these accounting standard are already covered in your CA Inter syllabus. Okay. So what is notified under this rule? AS 1 to AS 7, then AS 9 to AS 29. Out of this, you can see AS 6 has been deleted, means you can see that this AS whatever has been notified under this rule and AS issued by ICI is what practically same. There was one minute difference, that difference has been also withdrawn now. So these are practically same. These are same to same. Okay, and therefore in CA Inter syllabus you have done AS which were applicable to both non-corporate as well as what corporate companies to which Ind AS was not applicable. Understood? Got this point? Bolo. Up to this any doubt? It means now we need to understand which are the companies to which Ind AS is applicable. That we need to understand. Means in CA final this is our syllabus. This is CA final syllabus. Means now we need to understand about those companies to which Ind AS will be applicable. So remaining are those companies to which accounting standard will be applicable. Yes, sir. So now we are focused into this part. So to them what is applicable? To them Ind AS is applicable. Ind AS is applicable. But which Ind AS? Ind AS which are notified. Ind AS notified under Companies Ind AS rules 2015. So all the Ind AS which has been notified under companies Indian Accounting Standard Rules 2015 will be applicable. This company to which Ind AS is applicable. That is only our part of syllabus. So we'll discuss each Ind AS in detail. Okay. Yes. So but what is this Ind AS? What is this Ind AS? So Ind AS, if I say Ind AS, so Ind AS is nothing but it is conversed form of IFRS. Conversed form of IFRS. So what is this IFRS? IFRS means International Financial Reporting Standard. If you want to write down full form. If you want to write down International financial reporting standard. Now you must be thinking, so what is IAS, International Accounting Standard? So you can write down IFRS or IAS. However, IAS is an old nomenclature. IFRS is a new nomenclature, I will say. Got this point? Means what actually happened before 2001, there was actually IAS committee. IAS committee. And after 2001, they form one committee which is known as IFRS committee. The name has been changed because of some development globally. We are not going to that part. Okay. So before 2001, the name of the committee was IAS committee. Then it was changed to what? IFRS committee. Now, before 2000, whatever International Accounting Standard was issued, the number was given as IAS 1, IAS 2 and so on. Until now, there are IAS 1 to IAS 41. How many IAS? International Accounting Standard 1 to International Accounting Standard 41. Okay. Then when IFRS committee was formed, so what they have decided that they will not change the previous International Accounting Standard number and title. Means they retain IAS number and the title, and whatever new International Accounting Standard they will issue, now the number will be given as IFRS 1, 2, 3 like this. Means they have retained this. This was retained. This was retained. And whatever new accounting standard they have developed and issued, the number was given like this: IFRS 1, 2, correct now. Until now, there are IFRS 17, 1717. Okay. Okay, sir. Yes, sir. Understood. So it means, can I say, now we can say IFRS include IAS. So whenever I am saying IFRS, it means I am also informing you about International Accounting Standard, but I will not say it continuously. I will say IFRS only. That means it is inclusive of International Accounting Standard. Got this point? Have you understood this point? Bolo. This much you understood? Now what actually happened when India wanted to adopt IFRS, so they say will not adopt it, fully, will convert it as per our economic condition, and therefore we have Ind AS, that is the converse form of IFRS as per the economic condition prevailing in India. Because just try to understand, this IFRS has been developed as per what? Developed countries, but India is a developing country, so they say okay, we'll adopt IFRS but not fully, will convert it as per our economic condition, and therefore the name has been changed from IFRS to Ind AS. But there was a big challenge about numbers, because you can see here it is IAS 1, here it is IFRS 1, there are 2 1, are you getting what I am saying? There are 2 2, and therefore there was a challenge about what numbering should be done. So what they have done, when India it was conversed, so name was given like this. So what they have decided, this IAS will be numbered as Ind AS 1, Ind AS 2 and so on, and Ind AS 41. Ind AS 41. And coming to IFRS, this will be numbered as Ind AS 101, Ind AS 102 and so on, Ind AS 117, Ind AS 117. Okay, sir. It means just try to understand When I am saying Ind AS 116, it does not mean there are 116 Indian accounting standard. You will die. I will also die. When I am saying Ind AS 116, it means it is IFRS 16. And when I am saying Ind AS 16, it is IAS 16. Okay. So whenever I say Ind AS 1, it means it is nothing but what? IAS 1. When I am saying Ind AS 101, it is nothing but IFRS 1. Okay, sir. Okay, sir. But nothing to worry. It does not mean that everything is now a syllabus. There are some Ind AS, there are some IAS and IFRS which was deleted. So that has been deleted in Ind AS also. So that I am not mentioning, that you will be able to understand with the what? With our lectures. With our lectures. It means suppose there is no IAS 3. So if there is no IAS 3, there is no Ind AS 3. Are you able to understand? So IAS 3 has been deleted. If IAS 3 has been deleted, so there is no Ind AS 3. There is no Ind AS 3. Okay, sir. Okay. Happy. Are you able to understand? Now the question arises, what is the difference between Ind AS and IFRS? There is only 5% difference. Means can I say from understanding point of view, if you have understood Ind AS and then you just read 5% difference, you have automatically covered IFRS also. Means for IFRS, for getting extra knowledge about IFRS, you are not supposed to take another classes. If you know Ind AS, you know IFRS also. Only there is a 5% difference. And that 5% difference, however, that is not actually a part of syllabus. That are not a part of syllabus. Indirectly means, of course, even though they are mentioned in ICS study material, that is not a part of syllabus. But then also I will try to cover that if required. If required. Correct. So what are the types of difference? So when I am saying difference, between IFRS, now I am writing IFRS, it means it is including IAS also. Okay, yes sir. And Ind AS. There are three types of difference. First is known as difference of terminology. Means there are some terms which has been used in IFRS has not been used in Ind AS because of the requirement of Companies Act. Because of the requirement of Companies Act, I will just give one some example. Internationally, balance sheet is known as statement of financial position. Means if you see IFRS and Ind AS, I am just taking some examples. Internationally, balance sheet is known as statement of financial position. Can I write down statement of financial position? Statement of financial position. If you want to write down full statement of financial position. Correct? Okay. But in India we call it balance sheet. But can I say, even though we are calling it balance sheet, it does not mean it is actually a difference. Only the terminology has been changed. For example, my name is Chiranjeev Jain, but you can call me CJ. It does not mean the identification of that person has been changed. Chiranjeev Jain and CJ both are same. There are many students who call me CJ sir. But I am CJ means what? Chiranjeev Jain. So balance sheet means statement of financial position. Only the terminology has been changed. The format remains same. So this terminology has been changed under Ind AS. Similarly, internationally we call it statement of comprehensive income. So what is comprehensive income? A new term in your life. We'll discuss about that. If you want to write down full, because this is totally a new term in your life. Statement of comprehensive income. Statement of comprehensive income. Correct. However, India we call it statement of PL. Statement of profit and loss. So this is the terminology changes. But can you see this change in terminology will actually does not make any difference, will not give any difference. Only the terminology has been changed. I hope you have understood. One more I can say, if you want to just write down. Internationally, we call equity and other equity. Internationally, we call equity and other equity. Other equity is nothing but reserve and surplus. For the time being, you can understand that much. But in India, we call it equity share capital. And other equity. Other equity. Understood? Means internationally we call it equity, but here we call it equity share capital. So why the change in terminology? Why in India we don't call it statement of financial position? Why we don't call it statement of comprehensive income? Why we don't mention equity? Why we are using equity share capital? The reason is what? The reason is this is as per the requirement of Companies Act. As per the requirement of Companies Act. Because our Companies Act says financial statement consists of balance sheet, statement of profit and loss. Another part means if you are changing the terminology, suppose in Ind AS they are not using balance sheet, they are using statement of financial position. Statement of financial position, can I say it will not be as per Companies Act? Are you getting? To match the terminology, whatever has been used in Companies Act, they have used the same terminology in Ind AS. Are you getting what I am saying? So this is only because of Companies Act. This is only because of Companies Act. Okay, sir. Correct. It means, can you say once the Companies Act 2013 will be amended, and in Companies Act 2013, balance sheet will be known as statement of financial position and statement of PL will be known as statement of comprehensive income. Then in Ind AS also we can use the same terminology. In Ind AS also we can use the same terminology. Okay, sir. Today only introduction. Okay. I am just giving you the what is actually an Ind AS and what is the difference between Ind AS and IFRS. Any doubt? Correct. One big, just try to, one example I am saying, one example, try to understand. You know all about companies. You all know about companies. Company. Correct. Now we all know that if any shares, equity shares, whose face value is equal to rupees 10 has been issued at rupees 15. At rupees 15. Correct. Are you getting what I am saying? So you just try to understand what is the contribution from the owner. Can you say contribution from the owner is 15? Contribution from the owner is 15, and from the bachpan means from class 11, 12, what your teacher has said that anything contributed by the owner will be transferred to capital account. So as per IFRS, what journal entry we do? Bank account debit, to equity, means whatever has been received from equity participant will be transferred to equity. Whatever has been received from equity participant will be transferred to equity. That is as per IFRS. And can is 100% correct? But what our Companies Act says, anything received over and above nominal value will be transferred to securities premium account. Can is a maha bakwas account. Securities premium account. Can is securities premium, whatever you transfer to securities premium is actually not a part of profit. Then also we disclose that securities premium under the head reserve and surplus. Reserve and surplus means what? Whatever profit has been earned. But premium, whatever has been received from the equity participant, is a part of capital contribution. But because of Companies Act, under because of Companies Act, correct now, because of Companies Act, I'm writing Companies Act, because of Companies Act, we pass one journal entry, bank account debit, to equity share capital and securities premium. Understood? Correct. And therefore, in the balance sheet format, we don't write equity, we write on equity share capital at nominal value. We write on equity share capital at nominal value because of the requirement of Companies Act. Because of the requirement of Companies Act. Understood this part? Have you understood this part? So this is as per Companies Act. This is as per Companies Act. Okay. Chalega. Correct. Of course, can I say Ind AS cannot override a requirement of Companies Act. Ind AS cannot override. Just write down. Ind AS cannot override the requirement of law. Requirement of law. Chalega. This much. This is the first difference. First difference, have you understood? Terminology. Second difference is known as removal of options. Removal of options. Correct. Now IFRS is thoda sa flexible. Now IFRS has given some options for certain accounting treatment. Let me take one example. Example. There is one International Accounting Standard 40 related to investment properties. Investment properties. Correct. Now, as per International Accounting Standard 40, this investment property can be subsequently recognized as per cost model or fair value model. Fair value model means, can you say option has been given? At each reporting date, either you can recognize that investment property at cost or fair value as per your choice. Correct. This is the option given under IAS 40, but this option has been removed under Ind AS 40. Means under Ind AS 40, we'll do Ind AS 40. This IP means what? Investment property. IP means investment property. Can be only recognized under cost model. Can be only recognized under cost model. Means we have removed that option. Why we have removed the option under Ind AS? Just try to understand, if the option has been given, then financial statement of Indian companies will not match, will not be comparable. So to remove the non-comparability, they have removed the option only. Now every Indian companies will go for only cost model because the option is not there. Can you say removal of option also does not make Ind AS and IFRS any difference? That will not give any difference, because under IAS also there is one cost model. Under Ind AS also we have cost model. Option has been removed. Chalega. Correct. This is the second difference. Third difference, which is actually a major difference. Correct. Means that will be only, I will say, will give a difference between Ind AS and IFRS. That is known as carve out and carve in. Carve out and carve in. Carve out means what? Carve out means what? Ki accounting treatment, whatever has been given under IFRS, correct, has been changed under Ind AS as per the economic condition prevailing in India. So that is known as carve out. Means different accounting policies. Different accounting policies. For the same transaction. For the same transaction, we have a different accounting treatment under IFRS and different accounting treatment under Ind AS. That is known as what? Carve out. Okay, sir. Now, carving means what? There is only one carving. Carving means what? Ki IFRS is silent about a particular transaction, and in under Ind AS, a separate accounting treatment or accounting policy has been given that particular transaction. Means, can I say, accounting policies included under Ind AS for which IFRS is actually silent, that is known as carving. So this becomes the major difference between Ind AS and IFRS, and that is actually, I will say, 5% difference only. 5% difference. And that we'll discuss in the respective Ind AS. Means right now I am not going to discuss any carve out and carving. But you should know this term, carve out and carving. This is, you should know, carve out and carving, because I will use this term when I will start the particular Ind AS, carve out and carving. Understood? I hope Ind AS introduction you have understood what actually Ind AS is. What actually Ind AS is. Now we can come to the chapter number 2. What are Indian accounting standards? Let me read fast because everything I have discussed. Everything I have discussed. Indian accounting standard are the International Financial Reporting Standard, IFRS, including International Accounting Standard. Converse standard issued by Central Government of India through Ministry of Corporate Affairs under the supervision and control of ASB. ASB means Accounting Standard Board of ICI, and in consultation with National Advisory Committee in Accounting Standard, which is now known as NAFRA. You know about NAFRA? Previously it was National Advisory Committee in Accounting Standard, NACAS. Now it has been changed to NAFRA. NAFRA means National Financial Reporting Authority. This is Indian accounting standard. Indian accounting standard named and number in the same way as the corresponding international financial reporting standard for ease of reference. For the ease of reference, means number has been retained. Only IAS, so we call it Ind AS 1, 2, 3, 4. IFRS, so we call it Ind AS 101, 2, 3, and 101, 102, 103, like this. What is carve out and carving in Ind AS? Right now I have used the word carve out and carving. So there are three differences. First, already I have said various terminology related changes. Already I have explained. Then removal of option. This also I have explained. Correct. Then coming to carve out and carving. Carve out and carving. This can be important for MCQs. They can ask you what is carve out, what is carving in MCQs, multiple choice question. So certain changes have been made considering the economic environment. Considering the economic environment of the country, which is different as compared to the economic environment of developed country, which has been considered while making IFRS. So IFRS has been developed by considering the developed countries. So of course India is a developing country, and because of that reason certain changes have been made in the accounting policies under India. That changes is known as carve out. That change is known as carve out. So this difference are due to difference in application of accounting principle and practice and economic condition prevailing in India. The difference which are in deviation to the accounting policies, accounting principle and practice stated in IFRS are commonly known as carve out. Okay. Further, if there is no guidance under IFRS was silent for any particular transaction event, then the guidance provided under Ind AS, and Ind AS is given some guidance for that particular transaction event, that is known as carving. Okay. Carve out and carving, you understood? This terminology have you understood? Yes, sir. Now, what are carve out? Means how many carve out are there? How many carve in are there? That we'll discuss in the relevant Ind AS. Relevant Ind AS. Now, coming to roadmap for the implementation of Indian accounting standard, how Indian accounting standard will be applicable and to which companies it will be applicable, in which phased manner, that we are going to discuss. But right now, I will say this become past tense. This become past tense because already Ind AS is now applicable to all the companies to whom it was applicable. But then also question can be asked from this particular area. Question can be asked from this particular area in the form of multiple choice question. So I will say important only, don't ignore this particular point. Okay. Now, for the roadmap, all the companies are divided in two parts. One is known as general company, one is known as other than general company. Other than general company will be having non-banking financial company, banking company and insurance company. Correct? So, non-banking financial company, banking company and insurance company will not be covered for the companies in this part. So, for companies other than bank, NBFC and insurance company, roadmap is different. So, for banking company, insurance company and NBFC, roadmap is different. So, first we'll come to general company. We'll call it general. We'll call it general company. Means any company which are not banking company, insurance company, NBFC will be covered in this particular point. So it has been divided in two phases, phase 1, phase 2. But initially, Ind AS was applicable to general companies on a voluntary basis from 1st April 2015. From 1st April 2015. So why 1st April 2015? Because the rules was issued in which year? 2015 only. I said na, in companies Indian accounting standard rules 2015. Companies Indian accounting standard rules 2015. Correct? So it was applicable to all the companies, general companies, voluntary basis from 1st April 2015 and thereafter. Means any companies can apply Ind AS on a voluntary basis. But general companies, not banking company, not insurance company, not NBFC. Okay, yes sir. Then phase 1, it was applicable on a mandatory basis to the following companies from 1st April 2016. From 1st April 2016. So which companies? Which are covered in this phase 1, ABC. Any companies which are listed or in the process listing on a stock exchange in India or outside India having a net worth of rupees 500 crore or more. Having a net worth of rupees 500 crore or more. Means any company which are listed or in the process listing either India or outside India having a net worth of rupees 500 crore or more will be covered in phase 1, and to that company Ind AS will be applicable on a mandatory basis from 1st April 2016. 1st April 2016. Already I said past tense. Correct? Then all the unlisted company having a net worth of rupees 500 crore more. So can you see, if I can combine point number A and company, any company whether listed or in the process listing or unlisted having a net worth of 500 crore more. So point number A and B can be combined. Point number A and B can be combined. I can say in this way, any company having a net worth of rupees 500 crore more, for them Ind AS will be applicable on a mandatory basis from 1st April 2016. Correct? And next part was any parent company, any subsidiary company, any associate, any joint venture above. For them also Ind AS will be applicable on a mandatory basis from 1st April 2016. Got this point? Yes sir. Now I hope you know about parent company, you know about subsidiary company, you also know about associate and joint venture, because of course you have done accounting standard related to associate and joint venture where? In CA Inter. If you don't know what is the associate and joint venture, give me some time, we'll discuss in detail about associate and joint venture. Okay sir, yes sir. So any parent company means, can I say in this way? If suppose there is one company X Limited whose net worth is more than or equal to 500 crore. So to this company Ind AS will be applicable. Correct? Now any parent company of this company, any subsidiary company of this company, any associate of this company, any joint venture of this company, even though their net worth is not equal to more than 500 crore, to them also Ind AS will be applicable. To them also Ind AS will be applicable. Understood? Yes, sir. I hope very much clear. Okay, sir. The first phase is simple. Correct? Now, the question is as what is the meaning of net worth? So, how can we calculate net worth? That I will discuss. But and at what point of time net worth should be checked? So, for that one clarification has been given. The net worth shall be checked for the previous financial year. 3 previous financial year. Means 13-14, 14-15 and 15-16. And 15-16 means, try to understand. Right now, this is what 1/4/2016. 1/4/2016. So this become 15-16. This become 14-15. This become 13-14. So you need to calculate net worth at the end of each 3 financial year. If in any one financial year, it is more than equal to 500 crore, then Ind AS will be applicable. Ind AS will be applicable from 1st April 2016. Then Ind AS will be applicable. Understood? Means you need to check net worth for the 3 previous financial year. If any one financial year net worth criteria is satisfied, Ind AS will be applicable from 1st April 2016. 1st April 2016. Clear? This point is clear? Yes, sir. Correct. Coming to phase 2. Phase 2 will start from 1st April 2017. Phase 2 will start from 1st April 2017 on a mandatory basis. So the remaining companies, what are the remaining companies? So all companies which are listed are in the process listing in India or outside India on a recognized stock exchange and not covered in phase 1. Not covered in phase 1 because phase 1 whatever is covered, Ind AS is applicable. Means can you say all the remaining listed company or all the companies which are in the remaining company which are in the process of listing, to them also Ind AS will be applicable during this second phase, means starting from 1st April 2017. 1st April 2017. Okay, means can I say from phase 2 all the listed companies or any company which are in the process listing, Ind AS will be applicable. Ind AS will be applicable. Okay. Second, unlisted company, but not all unlisted company. Unlisted company having a net worth of 250 crore more. So any unlisted company having a net worth of 250 crore or more, of course, which are not covered in phase 1. For them also Ind AS will be applicable from 1st April 2017. And of course, for A and B, any parent company, any subsidiary company, any associate company, any joint venture above will be also covered under Ind AS. Super easy. Yes, sir. For this particular phase 2, net worth will be checked for the 4 previous financial year. For the 4 previous financial year, the net worth shall be checked for the previous 4 financial year starting from 13-14, 14-15, 15-16 and 16-17. If in any one financial year net worth criteria is satisfied, then that company will, for that company Ind AS will be applicable from 1st April 2017. Correct? Now you can see I have already said some reference question will be given. This reference question, of course, once you have understood, you can do by your own. Correct? I will come to the reference question, but have you understood? Have you understood? Now, suppose these are the reference question. How to study? Now, out of this reference question, suppose 3 and 4 I have done. So what you should do? You should give circle. Abhi right now I have not done, I will just delete it. Suppose 3-4 reference question I have done, just circle it. So what is not done 4-5, that is your job. You need to complete as soon as possible. In this way, what we'll do, we'll be able to cover the entire question of what? Question bank. Entire question of question bank. Got this point? Yes, sir. Correct. Any doubt? Correct. Now, first come to question bank. Question bank. Now you can see this question bank. This question bank, let me explain one point. I'll just show you the index. The index of question bank. Okay. You can see in the question bank now, all the questions are divided into three parts. This is the first part of this color. Means any question of this color is the first part. Then this is the second category of question. This is the third category of question. So I have divided all the questions of question bank in three categories. First, second and third. First category of question is very simple question which can be done if you know the content of Ind AS. Means if you are confident about content of Ind AS, there is no need to read because that is totally based on what the content of Ind AS. I will say if you don't have sufficient time, don't read this type of question. You can ignore it. Correct? So this is very simple question. Very simple question. Now second part, second category of question are those questions which require for practice. Means I will say that if you have time, means whenever you are revising the chapter, you should practice all these type of questions for understanding the concept. And the third category is what I will say expected, important and comprehensive question. This is must do. And most of the question of third category I will do in the class. It does not mean I will not take a question from second and first category. I will take question from first and second category also if they are related to concept. But third category, all question I will do in class, and that is must do. You should also do that question by your own once, even though I have done in the class. So all the questions of this category has been given a specific color. A specific color means if you come to the question, just try to understand. If you come to the question, you can see this is second category. Correct? Second category, second category, second category. In this, I think this become third category. Means from my point of view, this is must revise. Thoda sa I will say tricky. Okay. You can see this is also what? Third category. Are you getting what I am saying? So in this way I have divided. In this there is no first category question. All are second or third category. So this will help you to understand which question to revise, which question you can ignore, which question is must do just before exam. Okay, in this way you can save your time. In this way you can save your time. Okay, we'll take a small break. And then we'll do the other part of this particular chapter number 2. Today only chapter number 2, only introduction part. Okay, so today I will just do introduction of Ind AS. From tomorrow we'll actually start Indian accounting standard. Okay, we'll take a small break. Hello. Now, can we start once again, everyone? So before break, we were discussing about roadmap for the implementation of Indian accounting standard, and we have covered the first part, that is related to general company. We have understood phase 1 start from 1st April 2016 and second phase start from 1st April 2017. Very easy. Okay. Now before I come to the next part, that is about banking companies, insurance companies and non-banking financial company, let me just explain one part about my book. Try to understand what you will get. First you will get what? My Saaransh book. You can see volume 1, volume 2. There are two volumes, volume 1, volume 2. In volume 1 you can see there are chapter number 1 to chapter number 19. Then in volume 2 there is chapter number 20 to chapter number 34. Now this two volume has been divided in 4 volume of question bank. So you can see in question bank you will have 4 volume, volume 1, 2, 3, 4. So if you have opted for soft copy, you need to download it, and if you want to take printout, you can take printout. But my suggestion, just try to understand, if you are taking printout, your printout cost will be more than what? Our book cost. Better you buy book, because that will be in color format, and whenever you are taking printout, that will be what? In black and white. I will suggest, if you are taking printout and you are paying for that, better you buy the book. Better you buy the book, and because that will be in binded form, that will be easy to carry. That is my suggestion, your choice. Whatever you do, that is your choice. Now you can see volume 1 of Ind AS Saaransh book is volume 1 and volume 2 of question bank. So volume 1 of Ind AS Saaransh book has been divided into volume of question bank. Similarly, volume 2 of Ind AS Saaransh book will be volume 3 and volume 4. Got this point? Then I will also provide you MCQ soft copy. Now soft copy of MCQ has been divided into 3 parts. Actually, it is 4 part. Correct now. One is missing. I will upload it. One will be chapter wise. Chapter wise is right now missing. I will upload it. Okay. So chapter wise MCQs, it is only for understanding that particular chapter. That I will suggest you need to do right now. Once the one chapter is completed, do all the MCQs of that chapter, because you will not have time to do chapter wise MCQs after completion of syllabus. So if you want to cover chapter wise MCQs, I will suggest do it after completion of that particular chapter. Okay. Then case study. Then second part of MCQ is what? Case study based MCQs, means case scenario. That has been divided into 3 parts. In the first part, this you can see, this will contain all the RTP, MTP and past year examination question MCQ. This is must do. Must do. All RTP, all MTP, all past year examination question MCQs are incorporated here. Correct. But you can do this only after completion of entire syllabus. I will say that once you have done the first revision of FR, then take this particular PDF. Otherwise, right now you will not be able to do it, because it is based on what? All the chapters. Okay. Now second, you can see second part is what? The case study from old scheme of syllabus. In the old scheme, there was one paper, Global Financial Reporting Standard. In that case, also ICA used to ask some question related to what? IFRS. And can I say IFRS and Ind AS are same? So they can just copy paste that particular question and can ask in your exam. In past they have done, in future also they can do. So GFRS case study MCQ, this is, I will say, what? Your, means if you have time, then only go for this. Otherwise, I will say you don't have that much time to do all the case scenario. I will say once you have understood concept, and if you have done RTP, MTP and past year examination question, it is more than enough to handle all the types of MCQs in exam. Then you can see paper 6 IBS MCQs. IBS, you know, correct now. In IBS paper 6, they also ask some question related to FR MCQs. That all MCQs has been incorporated here. Okay, that is also must do. because that is also a part of syllabus. So I will say RTP MTP exam, FR all MCQs do, and paper 6 IVS MCQs you all do. GFRS case study based question is an option. If you have time, do it, otherwise leave it. Okay. Then you can see I have also given additional questions. I've already informed you that I will provide you all the illustration of ICS study material, which I think is not so much important from examination point of view. That is also covered in this additional question. And there are some questions which I have taken from other sources. One of the questions from other sources which was in my additional question have been asked in one of the exam, in the recent exam. It is quite possible. So this all illustration and other questions which I think I have taken from some other sources are incorporated here. This also is based on time, how much time you have. Just try to understand. If I say do this, do this, do this, you will not be able to do all the questions. But if the time permit, then you can just go through. Means I will say whenever you are free, you have nothing to do, just read it. It will not take much time. It will not take much time. Correct now. Wasting your time unnecessary, I will say do these additional questions. Okay? Yes, sir. But these are only when time permit. If there is no time, I will say you can just what? Ignore it. Then you can see I have also prepared test paper, test 1, test 2, test 3, test 4, test 5 based on the what coverage of syllabus. That I will inform you when you need to write down test 1, when you write down test 2, and when test 3, and so on. That is my what job. So that I will inform you as the time will come. Then I have also given one sequence of chapters. You can see in this sequence I will teach you. Many of the students were demanding, say, in which sequence you will teach. So I will teach you in this sequence. Today I have done introduction of what? Introduction of batch and introduction of Ind AS. Introduction of batch and introduction of Ind AS. Then Ind AS 37. Ind AS 37. Second chapter will be Ind AS 37. Then third chapter will be Ind AS 10. Then Ind AS 2, and so on. This is my sequence of chapter. Thoda sa I will say it may be modified also as per the requirement of the class, but normally I teach in this sequence. This is all you can download from my app. Right now it has not been uploaded, but it will be uploaded soon. Okay, sir. Chalega. So this all you will get in my app. Suppose if you are not able to download from my app, you can contact our team number. Okay, yes, sir. If suppose there is some technical issue, quite possible there are some time glitch, so then you can contact our team member. Okay, sir. Yes, sir. Now coming to the point number 2. First, scheduled bank, scheduled commercial bank, correct? Insurance companies and non-banking financial company. The first, scheduled commercial bank and insurance company, till now Ind AS has not been applicable. Understood? So you can see for commercial bank, RBI has deferred the Ind AS implementation. Correct? Understood? For scheduled commercial bank, till further notice through a notification dated 22nd March 2019. Means for banking companies, right now Ind AS is not applicable. Same thing is for insurance company. IRDA, correct? You know about IRDA? Has therefore the date of implementation of Ind AS. So can you say for commercial bank, for insurance company, Ind AS is not applicable. Thank you very much. But for non-banking financial company, because for non-banking financial company, we do not have any specific act. Correct now. For that, what Companies Act 2013 will be applicable, because that reason NBFC Ind AS is applicable, and for applicability of Ind AS to NBFC there are two phases, phase 1 and phase 2. It is similar to whatever we have done for general companies, but for phase 1 Ind AS will be applicable to NBFC from 1st April 2018. Means you can see for general company it was 1st April 2016 phase 1, then phase 2 1st April 2017. So here phase 1 is 1st April 2018. Chalega. Correct. Which other companies covered? To all the NBFC, whether listed or unlisted, having a net worth of rupees 500 crore or more. Same thing. Then any parent company, any subsidiary, any associate, any joint venture above NBFC, Ind AS will be applicable from 1st April 2018. Net worth will be checked for the 3 previous financial year. So net worth shall be checked for the 3 past financial year, 2015, 16, 16, 17 and 17. This you can what? Can identify by your own. because if it is first April 2018, 3 past financial year, you can easily identify. In any one financial year, if the net worth is more than 500 crore more, for that particular NBFC, Ind AS will be applicable from 1st April 2018. Then coming to second phase, similar. It will be applicable on a mandatory basis from 1st April 2019. First, NBFC whose equity or debt securities are listed or in the process listing or on any stock exchange in India or outside India having a net worth of less than 500 crore. Mechanism from 1st April 2019, all NBFC which are listed in Ind AS will be applicable. Ind AS will be applicable. Second, NBFC that are unlisted having a net worth of 250 crore or more but less than 500 crore, means which was not covered in phase 1. Which was not covered in phase 1. For that NBFC, unlisted NBFC, Ind AS will be applicable. Then any parent company, any subsidiary, any joint venture, any associate company of the above, also Ind AS will be applicable. Ind AS will be applicable. Understood? So phase 1, phase 2 are very simple. Chalega? Yes, sir. In this also what net worth shall be checked for the past 4 financial years starting from 15, 16, 16, 17, 17, 18 and 18, 19. Okay, yes, sir. But one thing is very much required to understand that for general company, voluntary adoption of Ind AS was allowed. But for banking company, insurance company, NBFC, voluntary adoption of Ind AS is not permitted. Voluntary adoption of Ind AS is not permitted. Very important. So voluntary adoption of Ind AS by NBFC, banking company, insurance company are not allowed. It means any general company, even though net worth criteria is not satisfied, can apply Ind AS on a voluntary basis. But NBFC, banking company and insurance company can apply Ind AS only as per their applicability. They cannot apply on voluntary basis. Okay, so very important. Very important. Correct. Now one doubt came about mutual fund. You said, what about mutual fund? So for that, SEBI has given one circular on 25th Jan 2022. SEBI via a notification issued by SEBI Mutual Fund Amendment Regulation 2022, they have informed that for all mutual fund scheme, Ind AS will be applicable. Ind AS will be applicable. So as per this notification, the financial statement and accounts of mutual fund scheme will be prepared in accordance with Ind AS. But for that, all mutual fund, Ind AS will be applicable. For that, there is no net worth criteria. Any mutual fund scheme, what will be applicable? Ind AS will be applicable, wide as notification issued by SEBI. Understood this point? Correct. The mutual fund also you have understood. Now, let us understand some important points. Let us understand some important point. One thing we have understood that Ind AS is applicable to both consolidated and standalone financial statement. It does not mean that Ind AS will be applicable only to standalone, not to consolidated. Understood point is Ind AS will be applicable for both consolidated and individual financial statement. Individual financial statement and standalone financial statement are same. Correct? So consolidated and individual financial statement. Okay, sir. Yes, sir. So what is the meaning of net worth? The definition of net worth has been given under Companies Act only. So net worth means paid up share capital. So when I say paid up share capital means equity share capital plus preference share capital. Paid up share capital plus all the reserve and surplus which are created out of profit. Normally all the reserve and surplus are created out of profit except two. One is revaluation reserve. I hope you know about revaluation reserve under accounting standard 10. So if the PP is revalued, any gain will be transferred revaluation reserve, that is not created out of profit. And if you remember capital reserve in case of amalgamation chapter, that is also not created out of profit. So excluding these two reserve, revaluation reserve and capital reserve in amalgamation chapter, all other reserve and surplus will be added. But does not include reserve created out of revaluation of asset and amalgamation chapter. So any revaluation reserve, any capital reserve created during amalgamation chapter will not be added. Also add all securities premium. all securities premium, then deduct all accumulated losses, means if there is some debit balance of PL account, that will be deducted. So accumulated losses and any deferred expenditure or miscellaneous expenditure not yet written off. I hope now there is no concept of deferred expenditure and miscellaneous expenditure not written off, but this definition has been taken from Companies Act. So if there is some expenditure which is not in charge to PL account, that will have debit balance, correct now. So that is also one type of accumulated losses. That is also one type of accumulated losses. So if any deferred expenditure or any expenditure which is not yet charged to profit and loss account, that will be also deducted. So can you repeat with me? First is what? Paid up equity share capital plus paid up preference share capital plus all the reserve and surplus created out of profit except revaluation reserve and capital reserve during amalgamation chapter. Then add securities premium, deduct accumulated losses and deduct any expenditure which is not yet written off. This will be known as net worth. This will be known as net worth. This is one question. This type of question can be asked. Come to question number 1. Come to question number 1. Following is a snapshot of an audited balance sheet of A company as on 31st March 2014. Company's A equity shares are listed on a Bombay Stock Exchange since 2010. So listed company. You can see they have given equity share capital, securities premium, general reserve, revaluation reserve will not be added, profit and loss account, liability will not be considered, fixed asset, investment, current asset, but they have one miscellaneous expenditure not written off, that will be deducted. So what is the answer? You can see 160 plus 200 plus 150 plus 75 and minus 80. Minus 80. It is coming 505. 505. So your net worth as per section 2 subsection 57 of Companies Act 2013 is 505. So what is the question? As per the roadmap, which phase company A fall into? So can you see it is more than 500? And if the question is silent, we will consider it as a general company. So it will fall in phase 1. Means the Ind AS will be applicable from 1st April 2016. From 1st April 2016. Chalega. This type of question can be asked. There is one more part. Will your answer change if the company is an unlisted company? No, our answer remains same. Even though the company is an unlisted company, it will fall in phase 1 because both listed company, unlisted company whose net worth is 500 crore more will fall in phase 1 and Ind AS will be applicable from 1st April 2016. There is one more question, question number 2. Let's say in question number 1, the balance of PL account is negative 375. Means what they are saying, it is not 75, it is negative 375. Now what will be answer? 160 plus 200 plus 150, correct, minus 375 minus 80, it is coming 55. Now you can see it is coming how much? 55. So your answer become what? If it is negative, so your answer become what? It is coming how much? 55 crore. Is coming 55 crore. Correct. So if it is 55 crore, can I say then if it is a listed company, then can I say Ind AS will be applicable during second phase, means from 1st April 2017. If it is an unlisted company, then Ind AS will not be applicable. Then Ind AS will not be applicable. That is only the answer given. I think you can just read. Hence, it does not meet the criteria as mentioned in phase 1. Okay. However, as company A is a listed company, it will irrespectively be covered in phase 2 as first criteria of phase 2 state. You can read it, means it will be covered in phase 2. If it is an unlisted company, Ind AS will not be applicable, correct, because the criteria of net worth is not satisfied. Super easy. Any doubt? No doubt. This type of question can be asked. Then one clarification has been given. Net worth should be calculated based on Ind AS financial statement or AS based financial statement. So just try to understand. Right now we are identifying whether Ind AS is applicable or not. Means till now we have not prepared financial statement based on Ind AS. Therefore net worth should be checked based on the financial statement which is prepared as per accounting standard, existing accounting standard, correct. So net worth should be calculated based on standalone financial statement, not consolidated, prepared as per existing accounting standard, not Indian accounting standard, not Ind accounting standard. So net worth should be checked for each company separately. So it will be not checked for the group company as a whole. It will be checked for each company separately by using the standalone financial statement which are prepared as per accounting standard. Okay, yes sir. Understood. Now some relaxation has been given for the companies whose shares or securities are listed are in the process of listing in SME stock exchange, small and medium entity stock exchange are not required to comply in Ind AS. Means any companies which are listed or in the process of listing in SME stock exchange, for that some relaxation has been given. They are not supposed to comply the requirement of Ind AS. However, they can adopt Ind AS on a voluntary basis. However, they can adopt Ind AS on voluntary basis if they are general company. But once Ind AS is adopted on a voluntary basis, then it is irrevocable. Then they cannot in future switch to existing accounting standard. Once Ind AS adopted, it will be adopted forever. Even though you have adopted Ind AS on a voluntary basis, correct? So once a company voluntarily follow Ind AS, it is irrevocable. Chalega? Yes, sir. Means can I say any company which are not covered, which are not covered in this particular roadmap, they will prepare their financial statement based on existing accounting standard, whatever you have done in CA Inter, correct? And therefore there are two type of companies: company to which Ind AS is applicable and company to which Ind AS is not applicable. So any company to which Ind AS is not applicable, they will apply AS notified under Companies Accounting Standard Rules 2006. Already I have informed you, correct? Now companies not covered by the roadmap shall continue to apply existing accounting standard which has been notified under Companies Accounting Standard Rule 2006. Correct. One more clarification has been given. Law will prevail over Ind AS. Any law will prevail over Ind AS, and therefore, even though Ind AS will say equity, but as per Companies Act, we will mention equity share capital at nominal value. Equity share capital at nominal value. One example I have given: law will prevail over Ind AS. Law will prevail over Ind AS. Correct. Now, this is also very important. Let me explain you with one example. Correct. Now, suppose there is one example. There is one Indian parent company and there is a foreign subsidiary company, and let's say this company is listed. So can you say if this company is listed, Ind AS applies. Ind AS applies. Now the question is that we all know that any subsidiary, any parent, any associate, any joint venture of the above company, Ind AS will be applicable. But this is a foreign subsidiary company. The question arises whether Ind AS will be applicable or not. Can I say Ind AS rules, Ind AS will be applicable only to company which are incorporated in India, because Ind AS has been notified in companies Indian accounting standard rules, and therefore can I say foreign subsidiary company are not under any regulation to comply the requirement of companies rules, and therefore can I say for them Ind AS is not applicable. For them, can I say their companies generally acceptable accounting policies will be applicable. Let's say for them IFRS applicable. Let's say IFRS applicable. One thing is clear that for foreign subsidiary company Ind AS is not applicable. But one doubt will come. Can I say they will prepare their own financial statement? We call it separate financial statement. Separate financial statement is based on Ind AS, and they will also prepare consolidated financial statement that is also prepared based on Ind AS. But for these, can I say these two financial statement, their financial statement, these two financial statement should be combined. How we can combine? Because this financial statement is prepared as per IFRS and this financial statement is prepared as per Ind AS. Therefore, we cannot consolidate, and therefore one clarification has been given that these companies will provide information to these companies based on Ind AS. Based on Ind AS for consolidation purpose. For consolidation purpose. Just try to understand. I have mentioned for consolidation purpose, means for reporting purpose they will prepare financial statement based on IFRS, but for consolidation purpose this foreign subsidiary company will provide information to Indian parent company based on Ind AS. This clarification has been given. Understood? This clarification very important from examination point of view. What they have given, it is a relief that an overseas subsidiary, means foreign subsidiary, associate or joint venture of an Indian company is not required to prepare standalone financial statement as per Ind AS. They are not required to prepare their own financial statement based on Ind AS. However, these entities still have to report their Ind AS adjusted number for the Indian parent company to prepare consolidated Ind AS account. Only for preparation of consolidated financial statement they will provide information based on Ind AS. Chalega. There is one very good question. Come to question number 7. Come to question number 7. Correct. You can see this is in this color. So this question is of third category. This question is of third category. ABC company incorporated in a foreign country has a net worth of 700 crore. It has two subsidiaries. Company X, whose net worth as on 31st March 2014 is 600 crore, and Company Y, whose net worth is 150 crore. Whether Company X and Y would be required to follow Ind AS from accounting period commencing on 1st April 2016 on the basis of their own net worth or on the basis of net worth of ABC company. Means what is the question? We are doing question number 7. So there is one company. Company name is what? You can see ABC Incorporation. ABC Incorporation. This is a foreign company having a net worth of 700 crore. Having a net worth of 700 crore. It has two subsidiary. It has two subsidiary. Correct? Company X and Company Y. So Company X and Company Y. Net worth is how much? 600 crore. And net worth is how much? For this is how much? 150 crore. 150 crore. Now whether Ind AS is applicable or not, so just try to understand for this company Ind AS is not applicable. So this actually become parent company of X and Y. This become parent company of X and Y. So for this Ind AS not applicable. For this can I say Ind AS will be applicable? Ind AS applies. For this can I say, now we don't know whether it is a listed company or unlisted company. The question is silent about that. Correct? It has not been given the question. Na? Whether company X they have not given. Correct? So if nothing is given, you can assume it is an unlisted company and Ind AS is not applicable. For this Ind AS not applicable if unlisted. If unlisted. Chalega. This is the answer. Let's see what the answer has been given. So some clarification has been given. You can read it. What the answer? Company X having a net worth of 600 crore at the end of financial year 2000. Acha, they are asking about on or after 1st April 2016. When they are asking about phase 1. So phase 1, even though listed company, why Ind AS will not be applicable? Okay, better you write down because they are asking about phase 1. So Ind AS not applicable. They are asking about phase 1. Okay. Chalega. Would be required to prepare financial statement for the accounting year from 1st April 2016 as per the Ind AS. While Company Y Limited having a net worth of 150 crore would be required to prepare financial statement as per accounting standard, not as per Indian accounting standard. Chalega? Yes, sir. Since the foreign company is not a company incorporated under Companies Act, okay, it is not required to prepare financial statement as per Ind AS. As per the foreign company is not required to prepare financial statement based on Ind AS. The net worth of foreign company ABC Limited would not be basis of deciding whether Indian subsidiary company X Limited and company Y Limited are required to prepare financial statement based on Ind AS. Means what they are saying, because foreign company is not covered under Ind AS rules, correct now, is not covered under Ind AS, therefore its net worth will not be taken into consideration whether Ind AS will be applicable to X and Y. That is to understood why. Good question. Yes, sir. Question number 7 done. Then coming to point number 9, company cannot adopt IFRS as a substitution for Ind AS. Means just try to understand, any company which is already applying IFRS cannot say that we will not apply Ind AS because already we are applying IFRS. So how it is possible? Let me explain. Let me explain with one example. Suppose there is one company X Limited, Indian company, is listed in Indian Stock Exchange and London Stock Exchange. Quite possible. London Stock Exchange. It means, can I say, as per the requirement of Indian Stock Exchange, they need to prepare their financial statement based on accounting standard. This is before 1st April 2016, I am saying. This is before 1st April 2016. Correct? And for this, they need to prepare their financial statement, let's say, as per IFRS. It means before 1st April 2016, this company is preparing two set of financial statement. One is based on IFRS, one is based on existing accounting standard. Now what happened? From 1st April 2016, now they need to prepare their financial statement based on Ind AS because it is a listed company. So what they are saying that already we are preparing financial statement based on IFRS, will not prepare financial statement based on Ind AS because already we have adopted IFRS. So whether it is practically possible? No. What they are saying, IFRS cannot be used as a substitution to Ind AS. Whatever financial statement is prepared based on IFRS is not equal to financial statement based on Ind AS. Means they need to convert their financial statement based on existing accounting standard to the financial statement based on Ind AS. This is the requirement. So IFRS cannot be used as a substitution to Ind AS. Understood this point? Correct? Now, how to convert financial statement based on AS to financial statement based on Ind AS, that is a past, that is actually will be covered under Ind AS 101. Just write down how to convert, that is right now we will not discuss. So for that we'll discuss Ind AS 101. So how to convert financial statement based on existing accounting standard to financial statement based on Ind AS, that will be discussed under Ind AS 101 coming soon in your life. Okay sir, chalega. Okay, I hope my speed is okay. My speed is okay. थोड़ा सा speed, it is higher speed, but I hope it is reasonable speed. Okay, any doubt? This point have you understood? Yes sir. So company cannot adopt IFRS as a substitution for Ind AS. Now these are the two more clarifications which are very important from examination point of view. Very important from examination point of view. Let me explain with the example only. Let me explain with one example. Try to understand. Suppose there is one company, general company, correct, and it is X Limited, and there is one banking company or insurance company. I mean, right now Ind AS is applicable to NBFC, therefore I am not taking the example of NBFC. Okay, understood? Now this is a parent company and this is a subsidiary company. Quite possible. Suppose this is Y Limited. Okay. Now let's say Ind AS is applicable to general company because it is a listed company or it meets the net worth criteria. Now the question arises, to this banking company, insurance company, which is a subsidiary company of this general company, whether Ind AS will be applicable right now. And says no. Because can I say for them the road map is totally different, and for that India's applicability is as per their time applicability. Correct now. It means for them right now Ind AS is not applicable, even though they are subsidiary of what? This X Limited, Ind AS will not be applicable. Means for them existing accounting standard will be applicable. Existing accounting standard, or I will say their act, their specific act, Banking Regulation Act, IRDA for insurance company. Understood? Yes, sir. Now the question is that if they prepare standalone financial statement, this will be as per Ind AS and this will be as per AS. Now the question is that for consolidated financial statement, can we combine this? No, we cannot combine this. Means for consolidated financial statement, because this consolidated financial statement will be as per Ind AS, they will provide information to this X Limited based on what? Based on Ind AS for consolidation purpose. Means indirectly Ind AS is applicable. Are you getting? But for reporting purpose, this Y Limited will prepare the financial statement based on existing accounting standard. I am saying they will provide information based on Ind AS only for consolidation purpose. Based on Ind AS for consolidation purpose. Chalega. Okay, sir. Understood. Same thing has been given here. You can see where a parent is a non-finance company, means general company, covered under Ind AS, and has a NBFC. Right now for NBFC also Ind AS is applicable. Okay, so you can ignore NBFC from this particular para. Banking company, insurance company, subsidiary, associate or joint venture. The parent has to prepare Ind AS compliant consolidated financial statement, and the NBFC, banking company, insurance company, subsidiary, associate and joint venture has to provide a relevant financial statement data accordance with the accounting policy followed by parent company for consolidation purpose until NBFC, banking company, insurance company is covered under Ind AS. Until they are covered under Ind AS. Once they are also covered under Ind AS, just for example, right now NBFC is covered under Ind AS. Now so they are also preparing their financial statement based on Ind AS. Banking company and insurance company right now is not covered in Ind AS, so they will provide their Ind AS based financial statement information to parent company for consolidation purpose. You can see same example has been given. You can just read it. So S Limited here, S Limited will provide information based on Ind AS to H Limited for consolidation purpose. Now there can be a reverse situation. What is the reverse situation? Next example. Suppose there is one banking company or insurance company, correct? To them right now existing AS applicable, and there is one company, general company. To them Ind AS is applicable. Now it can be a parent company, it can be a subsidiary company. Chalega. Now they will prepare their standalone financial statement based on AS. This company will prepare based on Ind AS. Now of course they will prepare their consolidated financial statement based on AS. Now the question is that can we combine these two? No, we cannot combine. So in this case this general company will provide information to this banking company and insurance company based on what? Based on AS for consolidation purpose. For consolidation purpose. Understood? Very important. Can be asked in exam. This type of question can be asked in exam. Okay, sir. What is given? Where an NBFC, banking company, insurance company is a parent and prepare consolidated financial statement as per AS. any subsidiary, associate and joint venture are non-finance company, means general company, and are required to prepare financial statement as per Ind AS. Such subsidiary, associate and joint venture shall prepare financial as per Ind AS. However, such subsidiary, associate and joint venture has to provide relevant financial statement data in accordance with accounting policy followed by parent company for consolidation purpose, means based on AS, until NBFC, banking company, insurance company is covered under Ind AS. Same example is given. Okay, sir. This is one very good question. Come to question number 8. Reference question number 8. As per roadmap, Ind AS is applicable to Company X from the financial year 17-18. Company X, non-finance company, is a subsidiary of Company Y NBFC. So Company X is a subsidiary of Company Y NBFC. Company Y is an unlisted NBFC company having a net worth of rupees 400 crore. 400 crore. Correct? What will be the date of applicability of Ind AS for Company X and Company Y? If Ind AS applicability date for parent NBFC is different from the applicability date of corporate subsidiary company, then how will the consolidated financial statement of parent NBFC prepared? Understood this point? Correct? So one thing is clear, just try to understand, for NBFC applicability start from 1st April 2017. Correct? But that is applicable for listed or unlisted company having a net worth of 500 crore more. So right now you can see, if it is an unlisted and having a net worth of what? 400 crore. So in this case, Company Y, Ind AS will not be applicable from 1st April 2017. Understood now? Oh, sorry. It is phase 1 is from 1st April 2018. This is 17-18. So guys, from 17-18, NBFC Ind AS will not be applicable only. For 17-18, Ind AS for NBFC will not be applicable. Means can I say for this financial year 17-18, the Company X, which is a non-finance company, will prepare their financial statement based on Ind AS, and Company Y will prepare their financial statement based on AS. And in that case, can I say now for consolidation purpose, this Company X, non-finance company being a subsidiary of Company Y, will provide all the information based on AS for consolidation purpose. Same thing has been given. You can read. I'm just reading for your purpose. In accordance with the roadmap, it may be noted that NBFC having a net worth of less than 500 crore shall apply Ind AS from 1st April 2019. That already I have said. Further, the holding subsidiary and joint venture or associate company of such an NBFC other than those covered by corporate roadmap shall also apply from 1st April 2019. Okay. Accordingly, in this case, Company Y shall apply Ind AS for the financial year beginning from 1st April 2019. Okay. Company X shall apply Ind AS from the financial year 17-18 as per the question. However, for the purpose of consolidation by Company Y for financial year 17-18 and 18-19, Company X shall prepare its individual financial statement as per AS. They will prepare the individual financial statement as per AS. And can I say, in this case, the Company X will provide their information based on AS for the preparation of what? Consolidated financial statement. That is not given the solution, but you can write down that also. Chalega, this type of question can be asked. Understood? Got this point? Okay. You can see the chapter is introduction chapter is over. But whatever question I have not done, that you should do by your own. But I would like to take one more question. I would like to ask one question to all of you. I'd like to ask one question to all of you. Means today class is over. Correct. Only one question is pending from my side. Just try to understand. Just apply your common sense. Apply your common sense. Okay. Suppose this questions is asked in exam. What will be your answer? Correct. Suppose there is one company P Limited, S1, S2, S3, S4, S5, S6. S means subsidiary, P means parent. Okay. Now S1 is listed company, correct? And every company net worth is what? Less than what? 250 crore. Every company net worth is less than 250 crore. Means one thing is clear that for S1, Ind AS will be applicable. Correct? Ind AS applies from 1/4/2017, where it is a listed company. Even though net worth is less than 250 crore, but from 1/4/2017, Ind AS will be applicable or not? Yes, sir. Now my question to you all, S1 Ind AS applicable, correct? You will say me, for P Limited Ind AS applicable or not? Yes, applicable. Why? Because P Limited is a parent of S1. And can I say S3 and S4 also Ind AS applicable? Why? Because S3 and S4 are subsidiary of S1. Now the question is that for S2, S3, S5 and S6, whether Ind AS will be applicable or not? One doubt will come. What do you see? Now just try to understand. S2 is a subsidiary of P Limited for which Ind AS is applicable, but Ind AS is not applicable as per point number A and B. If you read the rules, what is the rules given? Just try to understand. We need to understand how to interpret the law. How to interpret the law? You can see A and B, what is given? Companies which are listed and having a net worth of 500 crore more. B is unlisted company having a net worth of 500 crore more. Point number C, parent, subsidiary, associate, and joint venture of above. Above means A and B. So in this case, in my example, S2 Ind AS will be applicable if it is a parent, subsidiary, associate, or joint venture of S1. But can I say S2, S5, S6 is not a parent, subsidiary, associate, joint venture of S1, and therefore can I say Ind AS not applicable? Ind AS not applicable. But just try to understand, this parent company will prepare CFS. If this parent company will prepare CFS, so they need to consolidate all their subsidiaries. In that case, this S2, S5, S6 need to provide information based on Ind AS, correct? So for consolidation purpose, S2, S5 and S6 will provide information based on Ind AS. Will provide information based on Ind AS. Understood. Very good question. Can be asked in exam. We have one question of the same nature. What was the question number? I forgot. But there is one question. I think just read question number 5 and question number 6. Okay. You will be able to understand. All other questions, whatever I have not done, that you do by own, you will be able to understand. Okay, sir. So with this, we have completed our Ind AS introduction. Means the first chapter today is the introduction batch only. So I was not supposed to start any Ind accounting standard, but I hope you have understood Ind AS, what actually Ind AS is. Yes or no? Have you understood what actually Ind AS is? Now we are in a position to start Ind AS from the next class. Any doubt? Already I have informed you that after the class you will be provided a dedicated WhatsApp group. In that dedicated WhatsApp group you can ask all the subject related doubt. You can ask all the subject related doubt. If you have not received that dedicated WhatsApp group, contact, however it will be given through email, but sometime what happen, email is not received or whatever, correct now, then you can contact our team number. Okay sir, chalega. Today this much only I hope done for today's class. Chalega. Thank you very much. We'll meet in the next class. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye.